All right, so my name is Sean Mathis, and I'm the founder of Agency Alliance. Some of you may have heard of me, some of you may not have, some of you have been in our programs, some of you have not. Um, just a quick background on me. I started my insurance career as a team member with State Farm. I ended up moving to Liberty Mutual to start and build my own book from scratch from Liberty Mutual, and ultimately decided that the insurance industry was underserved with marketing and lead generation strategies. When I debuted Rookie of the Year as top rookie agent out of over 1,000 that were hired the year that I started with Liberty, and I maintained in the top 5 throughout my tenure there. And so what I was doing was leveraging social media and the internet to grow my business. And what I realized is that agents today are still depending on old archaic strategies from the 1990s and early 2000s to grow their agency, while the market has drastically changed in the way that consumers are responding to marketing, how leads are generated, and corporate is just simply not teaching these, and the independent world doesn't have any training at all to teach folks how to generate leads. So I realized that there was an opportunity here to serve the industry and really give something completely different and innovative. The insurance industry has been tainted with old internet leads that I think that providers are still recycling today from 5 years ago. So what we've done is been able to create an environment where we can help agents have a new way to generate leads and grow their agency. And what that's done is allowed me some intelligence and an in-depth perspective from a variety of carriers and agents from around the country. We've worked with over 1,100 agents over the course of 3 years. We've got the largest mastermind with over 100 members active right now in the industry. And one of the things that I've really seen a trend of is captive agents looking to go to the independent world, and get questions all the time. And like I said, when Chad came through our program, learning a little bit about him, he was a 12-year All-State veteran out of Alabama. Started his agency from scratch, and after 12 years decided that he wanted to go a different direction, and he undertook the massive undertaking of going independent. A lot of people, after even a couple of years in the captive world, feel bought in and feel like they're stuck. And so, seeing that Chad was able to do it successfully after 12 years, really kind of inspired me to know that you're not stuck. If you feel like you're stuck, you're not pot committed. You don't have to stay where you're at. There's a way to do it, but without guidance and without knowing what to do, what resources are available, things to consider, you can make a decision that could cost you tens of thousands, or ultimately get you locked into a really bad commitment on the independent world, which ends up being detrimental, and you would have been better off just staying where you're at. So and over the years I decided that we don't have any resources to help people. There's nothing out there. So in talking with Chad, we thought we could put together something that would help agents who wanted to consider this as an option. So what we wanted to do here today is really just kind of give you guys some pointers and some things to consider. Nothing to sell you here. Just sharing some information and really being a resource to you guys. Here in the near future, we will have a program that Chad will facilitate that will help walk you through the many steps required to go to the independent world, and make sure that you do it successfully with somebody who has done it and done it successfully. Had I had a resource like that, I probably would have went independent. But like I said, when I looked to go that route, I think at some point in our career as a captive agent, everyone considers it at some point. Did I make the right decision? Should I go independent? I think at some point everybody kind of plays with that idea. When I played with that idea and I started poking around, like, it was more than just thinking about it. Like, I reached out to some of the conglomerates. I looked at contracts. I sat in interviews. I put together a plan. I tried to piece together an exit strategy of how timing-wise, how I would make this happen. Like, really considered all things, and even doing that, I spent 3 or 4 months doing that, and realized that there's just too much here, and there's just not comfortable with. Felt like I was winging it. I didn't really feel like I had a concrete plan of action and approach to making this thing happen. It seemed like it was going to be a very, very disruptive process. And some of the people that I've seen go through this without any guidance and without knowing what to do, that were just shooting from the hip, it was a very disruptive process, and they went months without income. And that could be devastating to most of us, really. I think the average American might have $2,500 saved. So unless you're just completely above average, you probably don't have 6 to 12 months of reserves to go without money. So that being said, what we want to talk about first is really trying to decide if independent is even right for you. I think that's the first decision that we all have to make is independent right for me? So Chad, if you wouldn't mind kind of sharing with folks, that process for you, why you considered independent, and then how you ultimately determined that going independent was in fact good for you to accomplish the goals that you're looking to accomplish.
Yeah, absolutely, and that's a tough decision for every agent. Swimming away from the beach that you're already on can definitely be a frightening experience. One of the things that I became and I don't want to use the word disgruntled, but became upset with as a captive was feeling like I had absolutely no control. Feeling like no matter what I did, the only thing I was really in control of was paying the overhead and the bills for the agency and trying to sell as much insurance and hit my numbers and keep corporate happy. So I like to have freedom to do what I want to do. I like to have freedom to make my own marketing decisions. And over my tenure with Allstate, it just kept getting more and more micromanaged. I looked around one day and realized I really wasn't in control of anything. So all I could do was spend more money and write more business and put up with no freedom. So I had some friends that were independent agents that had done what I had done, and I began to ask them questions and look into how their agency was done, and decided that model was better for me because I had complete and total control. One major difference, if you write 50 policies with your current captive carrier, you're not going to hear a thank you. You're not going to hear anything. You're going to get emails about why didn't you write 100 policies, or next year your goals are going to be double what they were last year. The more you do, the harder they make it for you to hit your compensation structures and do the things you want to do. On the independent side, if I write a policy today with Travelers, I'll get an email today or tomorrow from a Travelers rep thanking me for putting that policy with that company, because now I'm in control of where those customers go. I'm in control of that ultimate outcome, and they know that. They know that I could have put them with Progressive, or I could have put them anywhere I wanted to. So I have a complete and total feeling of ownership, not only of the policies, but my customers and my business. Most captives make you have a certain type of office and a certain type of staff for each PIF and all these things that basically, in my opinion, they're telling you how you need to spend your money. And on the independent side, it is absolutely not that way. You can have whatever office you want. You can hire as many or as little staff as you want. Your overhead is completely controlled by you. When I was an Allstate agent, my overhead was just south of $3,000 a month, and that was without paying any staff. That was just to keep the doors open, lights on, and everything moving. Now my overhead, not including staff, is about $600 a month. So I really like being in control of the ultimate outcome, and that's really what made me jump. It's what really made me decide, I want to take control of this, because under the captive model, there's no way I can grow to the size that I really want to grow my agency. Sean knows I'd like to have a $15 million agency by a certain day, and there was no way I was ever going to flourish that way under the captive model. So I made the jump.
Awesome. Yeah, and like I said, guys, if you have any questions, please use the question box and let us know that you have a question so that we can make sure that we get to that. Like I said, I've got some insight in looking at that world, and there's a lot to consider about whether this is appropriate. It's funny. I send out an email to everybody who was in my network who subscribe to our emails, and let them know that we were going to be doing this webinar. And hey, if you're considering going active or going independent, register for this email is something that you want to know. I'm sure there's probably some level of skepticism with folks who maybe didn't want anybody to know that they're considering this. I know that's probably one of the biggest things in the captive world is the secrecy of knowing that you're considering this. So as you guys can probably tell, and if I'm wrong, let me know, but you shouldn't be able to see who else is on this webinar. Our interest is not to reach out to your DMs or your sales leaders and say, oh my gosh, hey, look, these folks are thinking about going independent. I got an email from a district manager that said, I've sent several people your way, and with things like this being talked about, I will never send anybody your way again. And I said, hey, that's fine, I get it, man. It's naive to believe that your agents aren't going to consider independent with or without our help. It's just something that's going to happen. And what I would share with you is you obviously have never talked to me, you don't know me, because my goal is not to convince anybody that captive is right or that independence is right. Ultimately, the agent has to make that decision for themselves, and they'll make that decision with or without my help. And quite honestly, in most cases, I would say that independent is probably not right for you, believe it or not. It's not for everybody. And so by no means are we here to tell you you need to go independent, because like I said, it's probably not right for you. And one of the things that we want to offer to you guys that are on this webinar is a free strategy session with myself and Chad to really take an in-depth look at your current agency, what your goals are, and help you determine if independent is right for you, helping you consider and going through some of the things to think about when you're going independent. Like I said, for me, it wasn't the right move, in large part because I didn't have the guidance, and so for me, I didn't want to. I was afraid to make the wrong move, and you definitely can do that. But there's things to consider, like quoting, right? Like at Liberty Mutual and Farmers and State Farm, you can crack a quote in 2-3 minutes. It's not that way with the independent world, right? The quoting is different. Commissions are not advanced to you in the captive world most of the time. We're going to talk about commissions and how those work, but the carriers cut them in most cases once a month. At Liberty Mutual or most captive agents, you write a policy, you bind it, and you get paid, right? So there's some lag time in commissions and things to consider in terms of cash flow. The tracking systems and softwares, all of those things are provided by captives that are not provided in the independent world. They have resources, but without somebody showing you what it is, it's up to you to go find them. So one of the things that we can do, and Chad and I can do, is show you the resources and give you, hey, these are the systems to use. Like, here's where you go to do this. Here's who you talk to for this. And having that so that you're not, spinning your wheels researching and not able to really make that determination. So I would like to openly invite you guys, if this is something you want to explore. It is in confidence. My interest isn't in telling your sales leader or anybody for that matter that it's something you're considering. But it is a big consideration to make. So the other thing that you really have to consider is your current contract. You'd be surprised at how many captive agents don't know their contract. Hopefully you guys have read that, because it's pretty important for you to know, especially if you're considering leaving. So Chad, and there's contracts too in the independent world, depending on the route that you go and how you get started. There's direct appointments, and there's conglomerates, associations, and things of that nature, master brokerages that you can join to help get more appointments. The key for going independent is to have appointments, right? And you can't always get directly appointed. In most cases, you can't with more than 1 or 2 carriers. So if you're just going to have 1 or 2 carriers and you're not getting the number of appointments that you really need to be successful as an independent, then it doesn't make sense to go anyway. So a little bit about contracts, what to consider um, on the captive and independent side. And I know each of these points, we could literally have a call on all of these points and discuss in depth. So again, we're just scratching the surface, and at the end, if you'd like to go further into it, we invite you to do so. I'll post a link here in the chat that you guys can fill out a form and let us know that you'd like to have a strategy session with us. But just briefly about contracts, things to consider, and what it looks like on the independent side.
Yeah, that's always something people don't take time to really research. And one thing I would say when it comes to looking at the contract stuff, as far as your current contract with your captive company, you need to know it. Now, most people don't, because it's 50 to 2,000 pages long, and it's terrible reading, and half of it you can't understand. So one thing I will do is sum your captive contract up for you, and that is they win. You can come up with 50 ways to try to go against it, or some way to try to outsmart them so that you can make your exit strategy how you want. But at the end of the day, that contract is built to keep you in, and it is built for you to lose. I don't say that being ugly for any one company. If I was a businessman doing what they're doing, I would write the contract the same way, because I would want to win all the time. But you need to understand that when it comes time to leave that, the non-compete is not a joke. Some people say with social media that you can get around the non-compete by friending all of your customers and various things like that. It's absolutely not correct. If a company catches you soliciting in any way, they will come after you. Now, you may win, but unless you have a $50,000 to $100,000 cash windfall to pay an attorney to fight that lawsuit, you're still going to lose. You're going to be out of business before you even have a chance to get started. So the first thing you guys need to do if you're entertaining this is understand very, very well how your captive contract works and what that non-compete is. Because if you don't, you can get yourself in real trouble real fast before it even starts. So just for instance, when I left Allstate, I sold my agency. You would think that sounds like, hey, Chad sold his agency, he took a check and everything was over. It's absolutely not correct. When you decide to leave your carrier, most of them have a 90-day clause that you have to give them 90 days to either find you a buyer or come up with another solution. So even when you say, hey, I've got a guy that wants to buy my agency, Allstate had to approve that guy. Allstate was involved in it to the very last second. They not only had to approve my buyer, they had to approve the contract that we wrote up. They were involved in it so heavily, I could not believe just how much they had their claws in me with their contract. So know your captive contract, know the risks of going against it if you try to do that, to have an exit strategy, which we'll talk about in a minute, and understand that non-compete is serious. Because if one customer says, yes, hey, they did call me, then you're on the hook. All it takes is one. The other thing with the contracts that are different on the independent side is they're all individual if you want to go the lone wolf route and get your own direct appointments. I will tell you that no company will talk to you as long as you're under contract with your current captive. So until you cut ties completely, you can't even sit down and have those conversations to even understand how you're going to do that. Now, you may get lucky and get to some manager that's willing to talk to you sort of tongue-in-cheek and on the backside without you leaving the company you're with. But if you reach out to those people 99.9% of the time, they're going to tell you they can't talk to you about being an agent until you're no longer an agent with who you're with. So that creates a pretty serious problem. If you leave your captive today and you want to be an independent, it can take you 3, 4, 5 months to get a contract or two for you to even start writing business. So be aware it's not going to be a situation that you can just say, I'm done here, now I want Progressive and Travelers and Safeco and Hartford and all these companies. Along with those direct appointment contracts, those companies are not going to talk to you unless you have a really proven track record. They do not care what you did in the captive world. And that sounds crazy, but they don't. They feel like their model is completely different and how you strive on the independent side is completely different, and it is. So they don't care if you wrote $2 million in 2 years. There are companies that will not give you a contract until you've proven yourself. Progressive and a couple of them, if you've got a pulse, they'll pretty much give you a contract. So you can start with a couple of contracts, but if you have an illusion or an idea that you're going to have 6 or 7 or 8 contracts, you can probably be prepared to write a ton of business with a couple of contracts first, and it take you about 2 to 3 years to really get the contracts that you really want. So understand that once you get over here, you don't just say, "Hey, I'd like to have that," and they give it to you. It's a very tedious process, and like I said, they will not talk to you until you're finished with your current company. So keep that in mind.
Yeah, and we have a question about discussing commissions as an independent, and yes, we definitely will. Definitely will. So, again, if you have any questions, just ask in the question box. I put the link for the strategy session there in the chat box for those of you who would be interested in taking a look at this. Again, at this point, it's nothing to sell you here. We're just here to help you guys kind of explore this and figure out if it's right for you, and kind of give you some direction. It's a long process, right? It takes a lot of planning and careful consideration to determine if it's something that you even want to do. So talking exit strategy, guys, this is this is really kind of the area that I got bogged down with, was trying to figure out how I would make this transition happen, timing wise, talking to looking at bonuses, because right, if I got quarterly bonuses at Liberty Mutual, and they were a big chunk of income, like $10,000, $15,000, $20,000 bonuses a quarter, and if you have to be employed when it's time to cut that check, or you won't get it. So if you leave in the middle of a quarter, then you're not going to get your quarterly bonus. So everybody knew, hey, if you're going to leave Liberty, you better do it on the last day at the end of the quarter, so that you get that bonus. So timing-wise, you can't apply, like Chad said, for appointments while you're appointed. Number one, most carriers won't, even if you fill out an application. And like some people try to get appointments on the side while they're captive. That stuff's all public, and your corporate compliance folks and people in HR, they're reviewing the Department of Insurance records. And I saw somebody at Liberty who was doing that. He got a traveler's appointment while he was at Liberty, and he got fired. So you got to be really careful about how you approach it. And of course, you're not going to be able to go get any resources from corporate to say, hey, I'm thinking about leaving. Can you guys kind of help me plan this out, how to do this? Looking at commissions and how they're paid, I think this is a direct tie-in that we'll get into right after the exit strategy, but knowing how the carrier does pay commissions, so you can kind of understand when to expect to start seeing commission checks come in. That gap in income that is likely to be there is important to know how long that gap is, to know what that looks like. The requirements of getting started and presenting your agency to carriers. All these things are things to consider. So, Dad, if you would let us know some of the key points that agents need to take into consideration when looking at an exit strategy, what those might be, and how important it is to kind of map this thing out before you start heading down that road.
Yeah, absolutely. The exit strategy to me is the most overlooked aspect of going independent. It was definitely overlooked by me. I did not fare well in that area. That I could have fared a lot better, and I did it a different way. But one of the biggest things to consider is most people, you could have a $200,000 book of business or a $2 million, and you don't want to leave and start all over again as a scratch as an independent. So one of the things to decide is how you're going to navigate that water. And a lot of guys go out there and they do, they go ahead and get some appointments secretly, like Sean was saying, and they try not to get caught. And then if they quote somebody through their current carrier, they can turn around and write somebody through an independent carrier in their own office. The biggest downfall and the biggest scary part of that is if you get caught, they're going to cut your contract. And if you have a deal like with Allstate where they will buy you out, basically, which most carriers do, you need to know they're going to freeze your money for a minimum of 90 days if they do that. So if you've got a big cash windfall somewhere, that may not be a big concern for you. Most agents, when they decide to leave, don't. So if you need every penny that you get every month from your current carrier, taking a chance and getting cut, you will literally get no money for as long as they say you'll get no money for. So be aware that you can end up in such a pinch that you can't even start your independent. One of the most promising exit strategies that a lot of people do these days is they open an independent in their spouse's name. There's nothing wrong with that. There is no contract anywhere that says you cannot do that. If your carrier tells you that you can't do that, it's absolutely not true. Your non-compete is with that captive. It is not with your wife. So a lot of guys decide that their exit strategy, they want to build it over a year. They do that. The only thing I will caution is if you do that, don't have a grand illusion that you're just going to start funneling your customers over to that agency. You can do it. It can be done, but you have to do it in a way that they don't start raising eyebrows about why there's a mass exodus of your book of business and you're not writing any more new business. Things like these throw red flags and they start coming to look and see what you're doing. So if they find out that your wife has one over here and all of a sudden you're losing a ton of business, they don't need a lot of evidence there to just go ahead and say, well, you're done with us and we're freezing your money. So it is a viable exit strategy, but be aware that you can get yourself in trouble with that one too. But the biggest thing I always try to tell people that ask me this question is no matter what exit strategy you choose, have one. Don't just wake up tomorrow and go, man, I hate Farmers, or man, I hate Allstate, or whatever, and call up and say, I'm leaving, I quit, and then jump over here. Because you're going to have a 3 to 6 month lag before you're probably even going to get to write a policy in the independent world. So have an exit strategy, whatever that may be. Look at it very seriously and take some time to plan that out and think about how you're going to navigate that waters. Because if you're not careful, you'll end up broke with no money to even start an independent, and now you're dead in the water before you even have a chance.
Absolutely. Very, very good and valid points there. You know, I've seen folks do it that way. You know, I've seen you know, people get burned using that as an exit strategy. So there's several different. Like I said, we could spend, you know, an hour just talking a week about exit strategies. You know, so we just want to give you some high points to consider. But this is something that we'll be able to help you with as well. You know, creating that exit strategy, because there is no cookie cutter. Here's an exit strategy template, fill in the blanks, and make it happen. Everybody's situation is different. You got to look at your contract, you got to look at timeline, you got to look at your personal finances, you got to look at investment, look at the market, you know, understanding the carriers and conglomerates that you're talking about. You know, going to, if you're looking at going that route, just a lot of moving parts to, you know, making this thing a success for you. So let's talk about commissions and how that works. I know that was a question that we had in the group was, you know, what do those look like? You know, different carriers are going to have different commissions. So, you know, and different payout structures. So if you could share some of the commission structures that you've seen out there, and, you know, if there was a way to kind of generalize the independent world, what that looks like, and, you know, how that varies, and why that's important to take into consideration.
Yeah, that's obviously what everybody wants to know. And the beauty of it is, and the quick answer is, you'll make more money as an independent. The reason is every contract is different. If you want to have some substandard contracts, you can see some of those pay as low as 8 or 9%. My personal agency, the lowest contract I have, pays 15% on new business, and I have some that pay 25% on new business. So the great part about the independent part is you can harness yourself to where, okay, if your current goal under a captive is $100 policies a month to hit your income goal, you may only need 50, 60 policies a month to hit your income goal as an independent. So you can kind of tweak your marketing and tweak other factors to where you don't have to be so stressed out. You get to just release those chains of, man, I have got to write a ton of business to hit my trips and do what I want to do. You now can just write business based on income, and you can also decide, okay, this is my income goal, right? Here's what I need to write to hit it. Sean mentions that some of the carriers pay differently, and that's correct. And there's two things to that one is a huge plus in my opinion, and some people like it, some people don't. Most independent contracts will allow you to write auto insurance on 12 months. They do advance the commissions on auto policies just like they do in your captive world. So when you're first starting out, it's great that you can write a $3,000 auto policy, and instead of getting 6 months commission, you can get 12 months commission. Now that's definitely a double-edged sword. If they cancel, you will get a chargeback, just like you would as you are now. But you can build a renewal base on a yearly basis, and if you can make that work, when you hit that first year renewal, it is twice as big as it would have been otherwise. So you can build a renewal base that a year from now just takes off and is huge, and you just can't believe how large it is. Now, on the homeowner side, in some contracts you get on auto, mostly in the substandard part, they pay monthly, so it's an as-earned commission deal. If you write a policy, they're going to pay you when they get paid. So you may get paid monthly on a few. Most of the time, that's the substandard carriers. On homeowners, it's all of them. You will not get paid until the company gets paid on that homeowners. So if you do a home closing for someone and it takes 30 days for them to actually get paid on it, you're going to have about a 60-day lag on getting paid on your homeowners. So be aware of that. If you come over to that side and you go, hey, here's my commission deal, man, I wrote $10,000 in homeowners this month and I haven't gotten paid for any of it. It's because the company hasn't gotten paid. So while you're making your income goals and your things, you need to be aware that some of those you're not going to get paid on the very next month. It could be the month after that before that happens. So that's a big consideration to take. But over the long haul, you will make more. You will find it a little easier to hit bonuses in some ways, and it's just out of the gate. You're just going to have a better ROI because you're just bringing in more money.
What's the what is the average percentage, or is every carrier different? Maybe some examples on percentages with different carriers and what they give. Do they give it based on? Is there do some carriers have a tiered commission structure where the more you place with them, the higher commissions you get? What do the bonuses look like? What is the commission percentages? How does that look with I know we don't have time to get into every carrier, but just some examples of some different models out there.
Yeah, there are some as far as the tiered part. In this world, we call it overages. So let's say you're on a Travelers contract making 15%, and Travelers is just phenomenally competitive where you are, and you write just tons and tons of Travelers. Travelers may decide at the end of the year to bump you to 18%. And when they bump you to 18%, as long as you're still sort of carrying that same amount and you're still writing that business, now you're at 18%. They call that an overage on this side. The bonus part of it, if you're a lone wolf and you have direct appointments, it can be a little difficult to hit your bonuses with all of them, because when you're not with a conglomerate, they all want you writing your business with them. So you have to keep everybody happy so that you don't get a contract pulled. Those contracts are pretty volatile. If you have one that you're not writing a lot of business with, they can send you a nice little Dear John letter and pull that contract from you. Nothing you can do about it. So it's a little harder to hit the bonuses. Typically, you see bonuses anywhere from 3 to 5%. So with Travelers, for instance, their contract's a little harder to get out of the gate, but when you get it, it can be one of the most rewarding ones you get. They typically pay 5% on a bonus. So if you wrote $1 million that year, you'll get 5% of $1 million, and they pay it to you at the end of the year in a lump sum check. So the cool part is you're no longer getting a bonus from one, you can get a bonus from multiple. The downfall is you're trying to keep multiple people happy, so it can be a little problematic to get a bonus from everybody. But typically on average in Alabama, it's 3 to 5%. Now, some of the percentages that change are renewal percentages. For instance, Progressive in Alabama pays 15 on new business, but they pay 12% on renewals. Travelers pays 15 and 15. So you will run into some carriers that don't pay that same amount on their renewal. But you plan for that, for that. It's not that big of a deal. And, when we get into talking about some more compensation stuff, if somebody wants a consultation, we can talk about fees and other ways that you can maximize that comp to sort of offset those renewals as well.
Yeah, and so that's one of the things that I was going to ask and mention. A lot of in the independent world, there's a policy fee or a broker fee that you're able to charge, because again, this is your agency, right? And so you provide a level of service that is deeper in most cases than the captive world at the point of sale. In other words, somebody comes to Chad and sits down, especially if they have a business that they own, and their personal lines. It's not just 2 minutes, run a quote, and here you go. Although it can be that way, you also have the ability to, okay, look at their quotes, look at their situation, and then you go, and every carrier is going to have an appetite for a certain type of customer, right? Just like your carrier, Farmers has an appetite for a certain type of customer. Allstate has an appetite for a certain type of customer. Every carrier's got the appetite for the type of customer that they're looking for. So what you're able to do is match the customer's needs with the company that is best suited for them. So that takes some research. You have to look at the different companies, especially with homeowners, seeing they're most competitive within houses within this age range and in these areas and things like that. So you have to do a little bit of analysis and placing them with the right carrier, because you do have options. In the captive world, we look at telling them, convincing them why we are the best option, because that's all we have. So we don't have to look for what the best option is. We just try to convince them that this is the best option. There is no need to shop. So that process of shopping the different carriers, going through and looking at the right placement for them, that takes some work. And a lot of brokers charge a fee for that service, because they are getting the added attention and theoretically the better options as a consumer of being placed with the right type of carrier. So there's a fee that you can charge up front, and it goes directly to you. There's nobody to share it with. You get it. Unless you're with a company like Goosehead, it's a mandatory. You must charge it, and then they get a percentage of it. But talk a little bit about broker fees, how you use them, and like just an example of how much income a broker might make on broker fees alone.
Yeah, that every state is different. As far as I understand, there are still a few states out there that don't allow this. In Alabama, a captive agent absolutely cannot charge them, and an independent can. Those fees are typically, the maximums are set by state, so you can contact your state DOI, and they'll be able to tell you what those are. So like in Alabama, I can charge a $30 application fee. So every policy we write gets a $30 application fee. So if you come in and you want to get home and auto, you pay a $30 on the auto and a $30 on the home, so that's $60. So that's another source of income for the agency. You're allowed to charge payment fees. I typically charge $5 if someone wants to make a payment in our agency. I'm not necessarily doing that to make more income. I do that sort of as a deterrent, because we want to sign as many people as we can up on auto draft. And if they don't want to do auto draft, I'd rather them just go straight to the company website. We just don't want to handle a lot of cash and a lot of money every month in our office. But there are agencies. I have a really good friend that has one in Foley, Alabama, that he charges fees in his office for payments, and it's an astronomical amount of money that he gets just off of that. In my agency, on average for me, and the nice thing is that all comes to me. My staff does not get a dime of that. It's on a low month, it's an extra $1,000 a month. Sometimes, if we're having a really smoking month, it can be $1,500, $2,000 a month I make just in application fees. The one that most agents love, and we've all had it happen, is the customer that comes to you because they got a ticket, and the judge told them that if they'll go get insurance, they'll cut the fines in half, or for whatever reason, and they're in your office and they buy that policy, you can charge that application fee. When they turn around and cancel in a month or just don't pay the next bill, and you get a charge back on that commission, you still made your $30. So you didn't do it for absolutely nothing. And the beauty of it is, eventually that person's going to come back and try to do it again, and we charge a $50 reinstatement fee. So if your policy can be reinstated or rewritten, we charge you $50 at that time. So you have a way of offsetting those customers that come in and just waste your time and turn around and cancel the policy. Is $30 a lot of money for doing that? No, but typically you only spend about 30 minutes rewriting a policy, and $30 over 30 minutes, a $60 an hour average. I mean, who wouldn't take that for a job? So the fees are something that you really need to decide how you want to do it. Do you want to charge them? Some people don't charge them. They just don't think that's worth it. But in our agency, it is certainly a whole other source of income that goes straight into my pocket. And if you have staff, that income going into my pocket offsets what I'm paying my staff in commissions. So I'm a little more apt to give up more in commissions to my staff because I'm making all the application fees. So it's something that definitely needs to be looked at, and I highly recommend doing it if your state allows it.
Yeah, and again, those broker fees they can vary. You know, in Texas, I'm not sure what the limit is, but I know that I've seen independent agents charging $100 application fees on home policies. It's easier to get more on a home policy because right there, it's all being escrowed, and you know it's rolled up in there. And so you know if you look, you know, somebody like myself, you know, need to do 380 homes in a year for $100 each. That you know if you're getting that kind of money, you're talking you know 38, $40,000 on homeowners application fees alone, much less the auto. So you know it can be you know, the more productive you are, and the more depending on how you set those, you know it could be a six-figure income in the broker fees alone, which is huge. And then it also allows you to give you some wiggle room, right? Like uh, consumers want to feel like they're getting a good deal. Problem is you just can't. With insurance, there's no bartering of the rates. You can't do anything to do a favor, to help them out, anything like that. So this is an opportunity where you can you know choose to give a break to somebody. You know, let them know, hey, typically this is what we do for this service, but I'm going to waive that for you. You know, really want to go to work for you and run your business. So it allows you a little bit of extra um, in an area where consumers don't actually, you know, ever get favors from agents, and it seems like the insurance world doesn't do anything to help the customer much in terms of pricing and things of that nature. So, for sales strategies too, kind of gives you some opportunity to work there. Um, we've got a few minutes here. You know, just if you could, just 2 minutes, maybe talk about what a conglomerate is and a master broker, what that looks like. We've used that term a few times. Some people may not know what that is, and then we'll do Q&A here. We've got a couple questions here pending, so we can briefly talk about what a conglomerate is, and you know what to consider there. Of course, we can go more in depth on the strategy call with you guys, but I think it's important to know what that is.
Yeah, conglomerates are a huge, probably the most popular way to open an independent in this current market. So, what it is, you mentioned a master agency. There are guys out there that are such huge independents. They start bringing in agents under them, and when they bring in an agent under them, they get a sub-agent code, and they're allowed to build a book of business within their agency. They're not necessarily trying to be a nationwide deal. They can just be local. Maybe they just bring a couple of guys under, and they're their master agency. The beauty of that is it gives you access to contracts immediately, whatever contracts they have, and you can write under their umbrella. The best part about the master agency part, if you do it under that structure, you pass the E&O risk to the agent. So sometimes people like that. They like not having the risk of the E&O. So getting under an agency that might be close by, some big agent that, you know, what have they got to lose? You get their quote volume up. They look better to their carriers. Every piece of business you write helps him get higher commissions on his contracts. So it's something any agent would entertain if they're of any size. The other option is a conglomerate. MGAs are huge. There's a ton of them. SIAA, Global Green, IPN, Gooseneck. There's a bunch of them out there, and they all are set up a little different on their contracts, but their end goal is the same. So it's like moving under the master agency, and each one of them has a master agency, but some of them are set up as franchises, like Global Green is a franchise, so it's a little different. But the beauty of it is they all basically offer you an independent agency in a box. So you want to be an independent, you don't really know anything about it, you don't really know what to do, how to navigate to some of that extent, you can come under them and sign with them, and now all of their contracts are open to you, they have commercial open to you, and they just take a cut of your commission. So they range anywhere from 70-30 to 90-10. Some of them are 85-15, some of them are 80-20. So I know there's a couple out there that I've heard of that are 50-50, but I've never actually seen those in writing, so don't quote me on that. But the beauty of the MGA is instead of you going out as a lone wolf and getting direct appointments with 9 different companies, 10 different companies, however many it is you want, you don't have the lag time of waiting to prove yourself to get those better contracts, And you don't have to keep each individual company happy all the time, because instead of Travelers looking at you as Sean Mathis will say, now they look at Sean Mathis as Global Green, if that's who he went under, or IPN. They look at the entire group. The really great part is it makes it a ton easier to hit bonuses. So when they look at you as a group, say Travelers, for instance, pays, we'll use IPN, $1 million in bonuses, and Sean wrote $10,000. He wrote 10% of that business for that year. Sean gets 10% of that bonus. So instead of you having to write just massive amounts of business with each carrier to hit your bonus, you could write a little bit with each carrier, and if the whole company as a whole gets a bonus, you get your piece. So over the long haul, bonuses are just 10 times easier to hit under the MGA. And typically those corporations and organizations offer some support. If you don't understand how to write commercial, they all have a commercial department that you can get help with that. And if you don't understand how to write or do certain things with setting up your agency, they'll help you with that a little bit. They don't do a lot, and there's still some pitfalls there, but they will. The main thing they don't help you do is market. Just about any of them will not help you market. So you need to understand, if you go with one of those groups, you can get some support on some things, but as far as your marketing and growing that agency, they're pretty much not going to help you do that. But highly recommend MGAs. I think over the long haul, an agent definitely makes more money going that route.
Awesome. So we've got a few questions, and I think that might help answer the question of how you keep all the carriers happy. Somebody asked, well, how do you keep those carriers happy? How do you manage, where you place somebody? And it can be kind of, if you're small and you don't have a lot of volume to choose from, and that's why a lot of agents tend to go with the master agency and build it, or get with an MGA, so that you don't have to, like, oh man, this person's really a better fit for ASI, but gosh, I really need to add some premium to the Travelers, so I don't lose that thing, and start making selfish decisions about where you place people to keep your contract satisfied. This is using one of those as a way that the minimums are going to be met through the MGA or through the master agency, and allows you the freedom to just build your book and not worry about that. And then once you're to a certain size, if you're writing, you got 15 million in premium and you're doing $1 million a year or something like that, you're not going to have to worry about that. It's not an issue. So early on, that's why a lot of people choose to go that route, is to manage that so you can more freely focus on getting business and placing them where it's best fit for the customer, rather than making selfish placement decisions to keep contracts. So again, lots discussed here. There's a lot of information shared, and we can go so much further into all of these topics. We're just purely scratching the surface here, so I would encourage you in the chat bar to fill out one of the strategy sessions if you want to take a more in-depth look. Again, we're not a master agency. We're not an MGA. We have no interest in steering you one way or the other. Simply an objective opinion from somebody who's been there and done it. As far as I know, there's nowhere else to get that type of consultation, especially for free. You can talk with a area manager with a conglomerate, but obviously he's got interest in placing you with them and getting you to sign their contract, not necessarily helping you explore this like we would do. So we got a couple questions here. If you have a question, we have unmuted everybody, so you have the ability to just chime in here. But we've got a question of if there's a price to get a contract with the carrier.
No, if you're doing a direct appointment, there's no price. There can be some setup fees as far as getting prepared to do that, as in most of us are used to having an agent license, but as an independent, you'll actually have to have an agency license. But I mean, $100 in most states, so it's not a big deal. But no, there are no, you do not have to buy your way into those contracts, if that's what you're asking.
Yeah. Can you
buy your way into a contract?
Yeah, or is it just commission?
Not that I'm aware of. Not that I'm aware of.
Premium written. So if you're short,
it's all about premium written, man. I mean, you can certainly buy an independent agency and then you take on whatever contracts they had. But as far as just buying your way into having Progressive yourself, no, you just contact Progressive and go through their steps just like you did to get on with your captive company.
Awesome. Does anybody else have any questions about some of the topics that we've talked about today? That we
Yeah,
can.
I do. Can you guys hear me? It's Matt
Yes,
talking.
sir.
Hey, Chad, how you doing? I'm a fellow Allstate guy. I used to be. I mean, well, I'm currently Allstate. I know you used to be.
Yeah.
Uh, I was told by a few people that if you take over an independent book, that you're not directly appointed to them. You're not directly appointed to all the carriers that they had because they were associated with that broker. Now, if you take a broker ownership and you go, like you really don't have a track record as a new owner. I mean, that's what I was told by just a few sources here in New York.
You can run into that in some states, and what that means is they're telling you that what they've said is true, but it's not 100% true. There are carriers that say I purchase an agency. They could take, you still have to kind of tell them who you are and what you're doing and all that. There are a couple of instances where a carrier may decide they don't want to keep the contract with you. I've never heard of that actually happening because,
Mm-hmm.
if you're buying an agency, you're going to buy a pretty large agency. So there's enough business with them that they don't really care as long as it's retained and grown. Allstate in particular, they will actually allow, at least in Alabama in the Southeast region, they will allow you to buy an independent agency and you're allowed to keep it for 12 months. And the whole idea is to funnel as much as you can to your Allstate agency. And then after the end of 12 months, you have to sell whatever's left. If you purchase that way, you're not directly appointed by those companies. It's a different deal. So that may be what they're talking about.
Okay.
But if you're going to purchase an independent long term, you will be appointed with those companies. There's no way around that.
You if you were to start it independent versus starting it, because I know you had built your book up pretty large with Allstate, correct?
That's correct. And I started scratch with 0 policies.
That's what I started too now, and I'm about 2.5 million, and I'm just looking as long-term results because I know that there's a lot of fluff with obviously with the captive agents that they try to get you right as much life, try to get you that bonus each year. I've learned a lot, but when I realized that when rates do go up, I really have nowhere else to go. So
Right.
I could have a 90% retention rate, but I know a guy that has a $4 million book, even if you could equate it, then he's got a 98% retention rate because he could move it. He's making more money than me.
That's correct. And unfortunately, with Allstate in a lot of their areas, there was a gentleman here when I was still with Allstate that had a $6 million agency, but he was pretty much on the brink of retirement and was writing absolutely no new business. And over a period of a year and a half, Allstate pushed him out. You know,
Yeah.
and he had a 95% retention rate. So the volatility with a captive is a lot larger than people really think it is. But one thing
They're
about
always pushing you for that new business. Push,
that's
push,
right,
push.
that's right,
And, and then their stories change.
that's right. And the thing about it, like you mentioned, life, that's a hot button with every captive that I know. It's up to you whether you write life on the independent side or not. There's only one contract, that's auto owners, that I know of that requires an agent to write life. The rest of them is completely up to you. And the awesome part is if you do write life, the guidelines are looser. I can place business with Lincoln Benefit Life easier than you can, being Allstate. And then on top of that, my lowest life contract pays 90%, and I have 2 life contracts that pay 120% commissions. So